Good morning, everybody, and happy Monday. It is January 20th. Obviously, U.S. markets are closed today. If you don't know that, we'll obviously go over it again in a minute, but it's a big week. So that's why I want to do this set the market regardless of U.S. markets being closed today. So let's get going here in just a minute. As usual, we like to wait a couple of minutes until we get to the about 2 minutes past the top of the hour or so. So about another 1 minute from now. If you are new, this is our Set the Market morning show. We're going to go about 15 minutes or so. It's roughly about what we tend to do. Make sure you give us a thumbs up, like, and you subscribe to the channel. Very important, so that you get updated in real time when we go live, and we have new analysis and podcasts and so on and so forth. But also to allow us to continue to do this morning show. So we'll get started here in just a second. Now, actually, we're just right at the mark to get started. Again, good morning, everybody. Hope you guys are doing well. Hope you had a good weekend. And you're ready for, again, what I think is going to be a very important week. Now, again, if you're new here, just make sure that you subscribe to the channel. You give us a thumbs up, like, very important, so we continue to do this. And again, so you are updated in real time and alerted when we go live, because we're going to do go live a lot this week, this year, I should say, given everything that's happening here. So, where to start? Let's talk a little bit about this week. And again, obviously a big one. We've got the inauguration today. A lot of moves, a lot of things working. What I want to want to point out, and obviously this is looking backwards as opposed to looking forwards, but you can see that the energy sector, this is U.S. equities, is up almost 10% year to date, whereas technology is essentially flat or up 0.7%. Now again, that's looking back, not looking forward. But we continue to think that the energy sector has tremendous potential. If you look at the energy sector and you look at the supply and demand imbalance across the curve, and I know the pushback here is all drill, baby, drill, cut red tape, supply, let supply come to the market. That's one story. But we're also at the same time opening up natural gas to the globe. So there's more. So look, there's so many things here that are bullish trend energy stocks. Again, it can get choppy. Let's see what executive orders look like. Let's see how the market reacts day over day, week over week, month over month. But ultimately, the supply and demand imbalance for energy is off the charts. Be that in things like natural gas, be that in things like copper, right? Things that go uranium. It's a question of time, and a lot of it really comes down to. And you guys know how much I even hate talking about this because it's so ridiculous. It comes down to NVIDIA. And now it's insane to think about that, but it really actually does. From an asset allocation, from a flows perspective. Fundamentally, NVIDIA is slowing down its rate of change in growth. For now, we're going through probably peak CapEx on the hyperscalers, as they call them. Microsoft is already going to start spending less for CapEx this half of the year because they already spent more than half their CapEx for fiscal 2025. They have a June quarter end. Anyway, I don't want to get too granular, but that can happen very quickly. And by the way, last time that happened, NVIDIA dropped 70%. That's not my forecast, but it happened last time. And last time the trade was nowhere near as crowded as it is right now. So I think equity investors could tech-only chart chasers could be in for a real situation this year. Again, I'm not short NVIDIA. That's not my shtick. I wouldn't be short NVIDIA, certainly not at this point. But I do want to point out, and I mentioned this yesterday in the Sunday. How many of you guys were able to join us last night in our Sunday evening session, which was I got so much good feedback on it. Give me a quick yes if you were able to join that. Would love to hear if you had a chance to join us last night on our Sunday evening session. And I'm going to quickly share with you the chart that I'm referring to. I'm going to quickly make it here on the other screen. I'll bring it over. And again, it's the line in the sand for NVIDIA. And again, it matters not because NVIDIA is the only stock that matters. It's because allocation in that stock is so crazy, and it embodies as everyone knows, essentially the AI story that that has been essentially ruling sucking all the capital out of pretty much everything else for the past 2 years now, or year and 3/4 at this point. Yeah, that's actually about 2 years. So let me quickly share with you this NVIDIA chart that I'm referring to, and then we'll go look at some other things as well. There's a lot of there's actually so much to do. So let me quickly go over this with you. So what we're talking about for NVIDIA is the 150 period moving average. So that's this line in the sand, and that line in the sand is probably going to matter because it has mattered now for 2 years. You can see where the stock has been bouncing. Now, again, that's just the technical aspect. What's driving the technical aspect, of course, is always a fundamental story. But again, whenever NVIDIA loses the battle loses that line in the sand, the whole market is likely going to start to see money flow into other parts of the market. Be that healthcare, be that stocks outside the U.S., which is I know no one thinks about that, or no one wants to think about that, but that's very, very likely to happen as the dollar comes off. So those are some things that are likely going to happen, and of course into energy is what we think. So let's go through. It doesn't look like a crazy amount of people that are here right now were attended last night, but let me just go over a couple of things from yesterday's session, because again, it's just so important to do this, and we maybe we'll go over a bit over the 15-minute mark here today just to be able to cover all this. So again, what I really think is likely to happen this year is this V-shaped reversal that so many self-directed traders have made a lot of money with over the past number of years. I think it's going to stop working, because again, I think we can have the year of the trader. What that means is we can have a trading year. And so a trading year is not this, right? So you have to ask yourself this, and I mean this very respectfully, because again, a lot of people are really good at this pattern, right? You buy something, oh, it's down at the 50-day moving average, oh, it's down at the whatever, the S&P is down 5-10%, it's a blind buy. That might kill your portfolio this year, and I mean kill, right? Like you can blow up a portfolio. What if we turn into this kind of a pattern? Because this pattern is very different, and it's going to mess with your mind. It's going to I want to use a 4-letter word here, but it's going to not be good for your mind because it can really screw things up. So it's the year of the trader, and we're already seeing it, right? So, and again, I keep coming back to the fact that this is a momentum market. So you look at, for example, Apple. Like if all I do is focus on momentum this year, for me personally, remember we don't do investment advice here. This is purely educational. I think that sets me up for a very, very, very profitable year this year. It's happening. Look at Apple, right? Got a momentum buy signal. This is using the TST trender. If you don't have that, by the way, we'll give you the link. You have to have this for this year, in my view. Buy signal. So the stock rallies 13.5%. Literally just buying an at-the-money call option resulted in the gain of that call option of $2,145. I mean, that's crazy. Like that kind of momentum. The momentum changed, by the way, on January 7th. So then it becomes a short. Stock drops 5%. The at-the-money put options double in value. That's a gain of $646 per contract. Same thing, literally just the S&P 500. This is Friday morning. So a few days ago, Friday morning, we got a buy signal in the S&P 500. And this is now the futures contract. One S&P mini futures contract rallied $2,750. One contract. Not two, not 10, one. That's just a 0.9% increase in the S&P. So if we're right about the year to trader, and I am about as convinced as I can be, this is going to be the kind of stuff we're talking about. Schlumberger is an energy stock. Same thing. This is an intraday signal. Obviously, this works on daily charts, 5-minute charts. Just buying an at-the-money call resulted in 125% rally in those call options. This happens all over the place. And so we need to understand what this means, and I'm going to just forward a little bit here in terms of Trump 2.0 as far as we're concerned. So I think what's very likely to happen is this V-shaped reversal stopping the work, and that's going to mess with a lot of people's portfolios, because again, a lot of people don't do analysis. They do, what's the chart breakout? And I actually think we're not going to see chart breakouts on a lot of things. It's going to be a very, very different market. Now, one thing that I I think is very important for this year on a macro level, on a big picture level, and this might drive everything else, is government spending. So government spending is essentially driving the S&P 500. So this is 2022. That's actually hockey stick even further. I was a bit of a time crunch the other day when I made this chart, but government spending, just look at this since 2010. You see how it basically went vertical, and it went even vertical even more in 23 and 24. The S&P 500 in that same period did this. So government spending is a big deal, has been a big driver for S&P 500 returns. Now, you think about this DOGE, Department of Government Efficiency department, and I have no clue how successful they are going to be. No one knows. They don't know. But what's their goal? Let's think about this. Their goal is to essentially cut government spending. I think they say up to $2 trillion. What if they only cut by $1 trillion? That's still a lot of fat coming out of this. So they're looking to reduce government spending, basically. Cut the fat, downsize government. Well, notice what I'm saying. It's reducing government spending. So it's going to take down this. Well, if this correlation has any holds at all true to the S&P 500, that's going to be a tall order for the S&P 500 to go higher. Right? I know a lot of people don't think about this stuff, but if all you do is focus on your 50-day moving average, you're going to have a very tough year this year, and I'll be very honest with you. So we need to respect these things and look at momentum, because momentum cuts both ways. Momentum is temporary, it's fleeting. It's not something like, it's not that hard to make money when the S&P 500 does this. Like any blind buy the dip worked. I think that's going to stop working, and we're going to go into an environment that was much more akin to like to the year 2000 to 2023. So, and by the way, like this government efficiency thing, they're not doing this to like hurt the economy. They're doing this for long-term gains. At least that's what they're saying. That makes sense to me, right? Like, it's not about politics here for me. It's about the markets. I just want to make money in the market. So I think that's important. So this could have short-term consequences that are again, it's going to cut into GDP. So then you could see the market essentially, again, government spending comes down, S&P 500 stalls, and that's just on the macro level. Now, what does that mean in terms of other things? Well, the dollar might start going down. And I'm not talking end of the dollar, end of reserve currency status. That's not at all the point. But if the dollar begins to weaken, then you look, which is the blue line, then you look at the lines below there, which are commodities in red, could start going up. Emerging markets could start going up. And you know who's allocated in the U.S. to commodities and emerging markets? No one, right? You know where everyone is. It's the stocks you have in your own portfolio, which is Tesla and Nvidia from a correlation perspective. And you might say, Serge, I don't have any Nvidia. Oh, you do. In your long-term stuff, assuming you have a long-term account, you have Nvidia, a lot of it, from a correlation perspective, right? So don't kid yourself, you don't have it. Energy stocks, again, I think a big driver for this. Again, we need to see what the headlines are. There's going to be something like 100 executive orders being signed today. It's going to be, almost comical, and I mean this respectfully. It's going to be a lot, right? So a lot of news here to digest over the next, hours, days, weeks, and it's going to be like that's probably for the next 4 years. But it's not all about that, but you can see already like these energy stocks are already working. So this is Schlumberger. This is an energy-related stock. And you can see in December 5th, we got a momentum sell signal. This is again using the TST trender. The stock drops 13%. The at-the-money put option, this should say put, rallied $394 or 180%. Like, these are real things. I'm not making this stuff up. This is what's called a trading year. So momentum, I think, is going to rule the year. We got a new buy signal on January 15th. That's Wednesday, last week Wednesday, on the daily charts. Stock pops 10%, 130% using the at-the-money call option. So all I had to do is buy an at-the-money call option. That rallied 130%, that call option. That's $243 per contract. So these are unbelievably juicy opportunities in the markets. Or you look at something like LNG is the stock, Cheniere. This is a natural gas infrastructure company. The stock's been on fire. We got a buy signal January 2nd, right out of the gate for the start to year. The stock rallies, pops 15%. The at-the-money call option rallies 180%. That's $2,570 per options contract, not by 10 contracts. So again, these are just incredibly powerful things in the year of the trader. And again, the TST trender, you're gonna want to use this indicator. If you guys don't have it yet, I'll give you the link in just a minute. But as I said last night, and obviously we're not going to go the full hour and a half that we did last night. You're gonna have to watch the recording for that. But 2025 is not only about Trump 2.0. It's really not, in our view. I think we could see AI settle into a digestion phase. And again, this is not against the companies. This is literally just cycles that happen in markets. I know people don't believe in cycles anymore because we've had this crazy government spending for 15 years, which has basically gotten rid of cycles. That's why you have the world's largest asset managers out there talking about how we're never going to go into a recession again. And they themselves laugh when they say that. They can't even believe it, but that's what happens when you have, a good friend of mine, he said this, 15 years is just long enough to erase memory. And it was one of the smartest things I've ever heard. And James, if you're listening, that was an awesome thing to say. So NVIDIA just quickly goes back to NVIDIA. So, Microsoft is cutting its spending already. Its CapEx is slowing. It's not going negative or anything. Or zero. It's just slowing. Well, if that happens, then what we're going to have is we're going to start to see chip makers have less top line. So NVIDIA right now trades at, I'll show you this. Oh shit, I don't have the chart in here. Let me see where that chart is. NVIDIA currently trades at a growth of 50% for next year. Top line, right? So if these CapEx cycles slow and they're already slowing at the margin, then this stock is going to have a really difficult time going a heck of a lot higher. In fact, it might correct. And as I showed you before, and this should say minus 70%, the last time we had CapEx slowdown, NVIDIA dropped 70%. That's not my forecast. I'm just telling you what happened last time. These are normal things to happen, by the way, right? Again, I'm not short NVIDIA. I have no interest in being short NVIDIA until it breaks, if it breaks the 150 period moving average. This is a great company long term, over a multi-year cycle. But can it not correct 30, 40, 50%? It would be very healthy, actually, if CapEx were to slow down. And I think it is. So just keep that in mind. That's an important thing. So, but again, that's going to be where momentum comes into mind. So, which gets us to Tesla, which we took Tesla down from our trade of the year for 2025 because it just rallied 80% when we initiated that idea. So here is what happened. This is, again, using the TST trender indicator. So we received a buy signal on October 25th of last year. That's where we said, okay, this stock might be the trade of the stock of the year for 2025. Well, the problem is the stock then rallied 80%. It went on this rampage rally for multiple reasons. Obviously there was the Elon Musk thing as he started campaigning with Trump and everything, and so the stock rallied 80%. Now, and just for perspective, the at-the-money call, again, this is just using the TST trender, the momentum indicator, the at-the-money call from that point on went on a 500% rally, 500%. So that's a gain per contract, per options contract, of $19,200. 10 options contracts would have been like $190,000. I'm just telling you what happened. I'm not saying this is what everyone's going to do. I'm just telling you this is factually what happened based on one very simple momentum buy signal. So again, if you don't have the trender, please get it. I'll give you the link afterwards. You're gonna love it for this year. Now, what's happening now with Tesla though is, first of all, the EV tax credits are going to expire, and from what we're hearing, they're not going to get renewed. We'll see, but that's what's going on. The stock is trading at 12 times sales for this coming year, and that's rich for a company that may actually not even grow sales. But what the research I keep coming across is that a lot of people are saying that when these EV tax credits evaporate, at least for the time being, the average monthly lease per car, and most of these cars are leased, is going to increase between $100 and $200, right? And that's per month. That's a lot for a lot of people. It is. So we think the hedge fund short covering that happened, which was basically the opposite of what happened with energy stocks at the end of the year, we think that squeezed the stock and that made it pop the 85% that led to a 500% rally in the at-the-money call option since the buy signal that we had down there. So, these are extremely powerful forces happening here. So I know we're already at the 20-minute mark, but I wanted to give you a quick sort of summary. And again, I would encourage you to watch the recording of yesterday's whenever they send it out. But I didn't want to just go over those things. So again, I think we're in a momentum trading year. If you don't have the trender yet, go ahead and grab it right now before this year really gets started. And by the way, we are today, so that's like this evening, if you own the trender indicator, we're going to go live at 7 p.m. Eastern. So that's, later on tonight, 4 p.m. Pacific. We're going to go live. We're going to analyze the market. We're going to go through all the craziness that may or may not be happening. I don't know. I have no clue, but we're open to it. So tonight, 7 p.m., we're going to go live. You're going to get the link if you have the TST Trender. And tomorrow, Tuesday, the chat room starts as well for the TST Trender. We're going to be live in there sending out trades. So go ahead, grab it. SteadyTradersSecrets.com/trender is the link right there. If you have to call in, if you have a question, you can do that there as well in that email, that phone number. So this is not supposed to be a pitch situation here, but I just truly believe that momentum is going to be what's going to make me money for this year. And so I just want to share that. So go ahead and grab it right now before this is over, but certainly before we get into the end of the day, and then you'll be able to join us Monday night, so tonight as well for that. So Study Trader Secrets. You know what? I just realized my video thing here. I have to probably move that. There you go. 401-203-7389. Otherwise, it's the SteadyTradersSecrets.com/trender. So that's it, folks. I'll leave it here. I know we went quite a bit beyond, but again, I hope I'm trying to give you as much value as I can here to start off. Again, I think the trading year just starts this year. SteadyTradersSecrets.com/trender. Otherwise, give us a call and get that done. You can also use PayPal. Thanks for joining. We'll see you guys here tomorrow morning. And again, if you have the trender, we'll see you tonight at 7 Eastern, 4 p.m. Pacific. Make sure you join us there for a live analysis of what's going on. I think the markets are going to do a lot of things. Futures, Bitcoin, whatever. So that'll be open. Obviously, the equity market opens tomorrow morning. And then tomorrow also, we start with the chat room. So if you have the momentum indicator from us. Get started here right now. See you guys tomorrow and tonight if you have the trender. And be well. See you guys soon. Thanks for joining.